Hello and welcome to our 7 Secrets to Making Money with VectorVest, secret number 3. My name is Steve Chappell, the Director of Trading Systems Development here, and I'm delighted and privileged to bring you this very special secret of the 7 Secret family. And Dr. DiLiddo, he's delivered the 7 Secrets to Making Money with VectorVest presentation so many times over the years, and it really is the crown jewel of all of our presentations. It has everything in there that you need to know to achieve consistent success in the stock market and ultimately financial freedom. It's done it for me. I know it can do it very well for you. And so we're going to revisit secret number 3 and show you how to begin or achieve consistent success by heeding the color guard. So secret number 3, heed the color guard. And if you get this right, it's going to get you off and started on the right foot in a really big way in knowing when it's okay to buy stocks and when it's not okay to buy stocks. And today I think is going to end up potentially at least being a classic example of just that. So let's get right in and take a peek. All right, so here we are at the home page, and right at the top, front and center, above the fold, if this was your daily newspaper that you get on the front doorstep, maybe have to pick it up at the store these days, just depends, I guess, but you get the point. The headline stories are always right there above the fold on the very front page. Right at the top, you can see with our market timing gauge, it says here that the color guard is neutral and VectorVest does not advocate buying any stocks at this time. Well, what do you mean? Can't you see the Dow's up 190 points? Well, look, let's investigate things just a wee bit closer. And oh, by the way, the Dow was up over 400 points not all that long ago. So if we come down here to the next box, titled color guard, just below the gauge, here you have much more detail to that information. And so the color guard is really derived from these 3 center columns with the colors. 3 major market timing components found within VectorVest, that being the price of the VectorVest composite, the relative timing, and the buy to sell ratio. And so we color code things according to their movement. If things improve week over week, generally they become green. If they deteriorate week over week, generally they become red. And yellow, of course, is anything in between. And so what the color guard is telling us now, by way of just that information alone, is that as far as the 3 indicators are concerned, the market is still very uncertain, with more of a bearish tinge than an actual bullish tinge on a current basis, because we see more red lights more currently than we see green. And so to make that or help that make sense to you, what I'm going to do is quickly take you to the market timing graph and have a quick discussion on what market analysis is and why it's important. So we're going to come right up here to the top, go to the timing tab, from there, market timing graph. When we pop this open, first thing to learn if you go to something like a 10-year graph is that the market moves in waves. It really does. So you have these beautiful up waves when making money in the stock market is as easy as it's going to get. And then you have other times where the market's in down wave. And that history repeats itself over and over and over again. And so what we preach here in VectorVest is a precise method of getting in after the market has stopped going down and started going up again. And then when the market proves that it's gone far enough lower, we want to get more defensive. Stop buying stocks. That's defensive mechanism number 1. And then we can lean on our actual market timing models to totally get us out of harm's way when the time is right. But the first thing is, should I be buying stocks right now or not be buying stocks? And what we're saying is, we're going to predominantly be pushing you to buying stocks when the market is on the way up, not on the way down. And if you just look at the graphic, over time, that can have a huge impact towards getting you to the finish line and financial freedom. So let's get back into the color guard. All right, I'm going to walk you through things a little bit more cleanly now and under the current situation to kind of set things in stone for you. In the price column, we're yellow today because while we are higher from yesterday, as the market averages alone would point out, we are lower than a week ago. So the stock market is actually not going up right now. While it might be going up for an hour or two, when we look at it compared to just a week prior, it's lower. So the markets are actually, for the course of a week, moving down. Okay. So now on Monday, things could change. And that would be if somehow price is able to climb above what will be a week ago's reading at the close on Monday. And that reading is 54.05. So it has to move a pretty darn good bit to get there. Nearly $1 by the close of business Monday for you to have a green light. And that's only because we're working off of a yellow, or even if we were working off of green. Looking back to where you were 5 days ago is your best guide as to ascertaining whether there's the possibility for a green light tomorrow or next week. And there's certainly possibilities through the early portions of next week to get a green light. As you get into Thursday, you'll be working off of a red, so it won't be possible to have a green light next Thursday, if I've done the math in my head correctly. But then you get to the other indicators, the timing and the buy to sell. Now these indicators, let's take that same position. Market's up Monday. Can we have a green light in the RT or the buy to sell ratio column? First, what is RT or what is BSR? And then can we have a green? So I think we all understand price. When we start talking about RT, we're talking about the short-term trend. Now, on Monday, not only will this have to go up above a week ago's reading, which will be 0.86, I could see that that's certainly possible. It also, in this case, has to go above 1. So, that's you go from short-term downtrend to short-term uptrend when you get above the 1 level. So very unlikely. This indicator does not tend to move that quickly over that period of time. So you won't have a green light in the RT column next week until you get above a week ago's reading, should that happen, and RT gets above 1. Same thing with the buy to sell ratio. Now, when we think about the buy to sell ratio, it's the number of buys divided by the number of sells. And by way of that, we know whether the upturn or downturn in the market is robust. For example, if you take the buys, divide them by the sells, this indicator doesn't go above 1 until there are more buys than sells. And if there's more buys in VectorVest than sells, knowing that it's difficult to even get a buy recommendation in VectorVest, that indicates broad market support to the rally. Lots of stocks are on the move. More stocks are on the move than aren't on the move. Okay. When you're below 1, much as where we are right now at 0.35, only 0.35 stocks are buys to every sell. So while it's good to see that it's up from yesterday, it's lower than a week ago. There are fewer buy recommendations in VectorVest today, and a good number less today than there was just a week ago. Does that make you feel really good about running right out and buying some stocks? Well, I tell you, the 0.35 that's there, vast preponderance of those are going to be energy stocks. More specifically, petroleum related in most cases. Energy has been the one area or segment of the market that is inflating, So the color guard is telling us a lot of information very quickly. Market's made a pretty good jump off the recent lows, hasn't it? But the buy to sell ratio never really started rocketing towards 1, where broadly stocks were on the rise. It's been very focused, and it's been predominantly an energy rally. So not to get too far off the color guard detail here, but when you check the remainder of the homepage, what do we see at the top of the industries? Petroleum. If you go further, let's go to large. Sound like a broken record. Petroleum. A few other things sprinkled in there, but every single petroleum industry is up near in the top industries in the entire stock market. So there have been opportunities there, and Chappell's Champs goes ballistic, for example, has really predominantly put folks in that space, which has been great. But back on track here, the message is, no, today, look at the indices sinking as I'm talking. Today, yesterday, not great ideas to be buying stocks because prices are lower than they were just a week ago. Fewer stocks are carrying buy recommendations. The short-term trend of the market is weakening on a week-over-week basis. See what I mean? And so the color guard is very informative. We say it's a terse yet comprehensive analysis on the stock market. And while it's fun to compare it to a traffic light or a mood ring or something that's very colorful and tells you kind of the pulse of things that are going on, it's much more important in that it's detailing for you very quickly whether the stock market is going up or down, whether the trend is up or down, and whether more stocks are carrying buy recommendations or sells. Thereby, the stock market is healthy or weak. And what you have right now is a stock market that tried to strengthen. We garnered some green lights, and had you bought stocks, you're probably sitting in pretty good position, particularly if it was energy, as you likely should have. Now, we just let our stops, our money management techniques, carry the load until we see another green light in the price column. So Dr. Bart DiLiddo wrote a series of essays I'm going to give you in a PowerPoint slide here in just a bit. One of them is called Become a Green Light Buyer. And so what we want to look for are these green lights. And then we want to look for the stock market to be rising the following day, either by way of the futures or after 10 a.m., whichever is easiest or actionable for you, and be looking to buy stocks then. But there's always a first green light and a last green light. I'm not saying this is the last one, but there's always a first one and a last one to every market rally. Just like there's always a first red light and a last red light to every market decline. And so all of the wonderful profit potential come with the earlier green lights. So do not treat green lights with impunity, and realize that the first green lights that begin to populate here are often the best in terms of the reward that you're able to accomplish over time. All right, so hopefully that gives you all we need to know now in terms of the color guard. It's given you a wonderful snapshot of not just the direction of the stock market, but also the internal composition by way of buys and sells. That may seem like it's not such a big deal, but it's very difficult to get a buy recommendation in VectorVest. Generally, you have to have some fundamental value to you to get a buy recommendation, and you have to be moving up in price at a really good clip. And so it really does truly detail the health of the stock market very well. And what we have right now is a stock market that's still quite unhealthy, more unhealthy than it was even just a week ago, a little healthier than it was at the lows. So we do find ourselves somewhere in between in terms of where the health of the market was a couple weeks ago compared to where we are now, but we are softening. And so it's not a good idea to be out there buying stocks. And every time I look up at the quick list, the numbers continue to shrink, and I'm not surprised. Right? So all of that being said, then we come to this column here, the MTI. Now the MTI combines the trends of the three aforementioned color guard indicators into one single comprehensive indicator for timing the market. And it's cast 0 to 2. When this indicator goes above 1, we say the underlying trend of the market is up. So the week over week direction of price is known as the primary wave. And that is detailed in the first two letters in the trend column. The second two letters are a function of the MTI value, above or below 1. So right now we're down because week over week the price of the composite is lower, and the underlying trend is also still lower at this time. It almost got to a position where we were going to say the underlying trend of the market is now up. Got to 0.98. but never broke into above 1 territory there. So the underlying trend remains down and is now sinking lower on that scaling again. So we are down, down, and even confirmed down. Now we're not going to be detailing the market timing signals. We're sticking solely to the color guard here, but anybody at VectorVest hopefully is now acutely aware that in a confirmed down, the market has not risen to the point where those of us that are more conservative to prudent in nature should feel really good about the market movement just yet. There has not been enough for the buy to sell ratio to get its way all the way up above 1, indicating broadness to the rally, more stocks participating than not participating. All right, so all that being said, I know there's a lot of words, some ground to cover there. Just know if there's not a green light in the price column of the color guard, generally we don't want to be thinking about buying stocks. And speaking in particular to new investments that we want to hold over time. Not talking to the traders out there as much that want to get out there and slug away at something every single day. But generally speaking, it's not a good idea for anyone. We want the primary wave of the market to at least be in an up mode if we want to be buying anything at all, whether it's a trade, an investment, swing trade, whatever the case may be. I always trade congruent with the primary wave. So all of that being said, what is the color guard doing for us right now? It's keeping us out of trouble. Or at least I hope so. Because if you're out there buying stocks, you're not listening to what VectorVest is telling you to do. There were times very recently and much lower prices in the stock market where there were beautiful times to be buying stocks. But right now, what we need to do is wait for the next green light. Now what I want to do is talk about some resources that can give you some further information. So what I'm going to do is quickly go over here into VectorVest Views. And from there, we can go to the special reports. And then right here towards the top, there's a color guard special report. You can even print this out through your printer, and it's wonderful. Oops, double click it. Right here at the top, it will go through some of the rules and the confirmed calls, give you more background on the primary wave and the underlying trend. It'll also go through the color changes and what needs to happen, so you could print this out, put it on your desk until you get a better feel for things. It'll also go through all the different situations and what our general guidance will be, whether you're up, 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 down, down, up, down, down, and then some more general commentary here, which is wonderful. Okay. Also, a little table, and a very telling table from one major thing, and that is the primary wave. We say here at VectorVest, the primary wave dictates the action. You might have heard me say earlier that I try to make sure with every trade that I place, if I'm going long, the primary wave needs to be up, and here's why. You know, there's a lights, a trend, a meaning, and an action. So 3 greens is up, up, color guard is bullish, buy stocks. And everything that says buy or buy with caution, the primary wave, the first 2 letters of each column is up. Not necessarily the second 2, but the first 2. Okay. So there are situations where the color guard can be neutral, and you can think about buying stocks on a good up day, and that's because the primary wave is at least up, the week over week direction of the price. I would suggest until you get far more comfortable with what you're doing that you stick to the green lights. But just know you at least want the primary wave up. What does it say as far as guidance all the way down the list when the primary wave is down? Doesn't matter what the underlying trend is doing. It says do not buy, do not buy, do not buy, do not buy, and there's no caution whatsoever. It's just do not buy. Simple as that. So the primary wave at minimum needs to be up. And if you're newer to VectorVest, I would encourage green lights. A green light in the price column as a wonderful indication that the stock market is healthy and it's on a good, consistent rise in the stock market. All right, and so hopefully that'll get us most of the way home with finally some important essays. Many from 2004 that are timeless. Keep your eye on the MTI, Market Timing Explained, the underlying trend, and the color guard. And then the one I've highlighted in green, if you look at no other, make sure you look at that one, but I would encourage you to read them all. On August 21st, 2009, Become a Green Light Buyer. It's a wonderful essay. All of them are, otherwise they wouldn't be. And there's so many, I had to cut it back to what I thought just gave you the best information possible in the fewest amount of essays possible. If you search color guard in VectorVest views, you're going to find a ton of stuff, and rightly so, because market timing is a big part of what we do and do very well. So I hope this has been good for you. Don't forget about the special resource, the color guard report. Let's become a green light buyer, and we'll see you right back here next time at VectorVest University. See you then.